Good evening, everybody. That reminds me of the story of the guy, 60 years old, comes into the doctor, goes through his physical, and the doctor says, "Man, you're in good shape." And he goes, "Oh, that's because I go hunting with my dad up in the mountains all the time." He goes, "Oh, your dad goes hunting up in the mountains? How old's he?" And he goes, "Oh, he's 80 years old, and I have a hard time keeping up with him." He goes, "Man, you guys come from a good stock of healthy people." And he goes, "Yeah, my grandfather, we have a hard time keeping up with him." And he goes, "Your grandfather goes hunting with you?" He goes, "How old's your grandfather?" He's 100. Yeah, he's in good shape. As a matter of fact, he got married this past weekend. The doctor said, "Why the heck would anybody 100 years want to get married?" And the patient said, "Who said he wanted to get married?" All right, we're just about ready to start. I've set my cuckoo clocks. They're all cuckooing now finally at the same time. Mike, you get more than your money's worth in this spot. All right, here's we're going to kind of delve into some very simple trend analysis. Trend analysis based on what are the indexes doing. And we have the simple rule that as long as you don't close below the T line, you're in good shape. Well, last week we had a situation where or a couple weeks ago, where we had the Dow. Let's see if we can get rid of whatever that little thing is. We had the Dow. Still can't get rid of that thing. Man. With a shooting star and then a close below the T line. And the Dow was in a downtrend. Was that a reversal in the markets? Not necessarily, because if we take a look at what the NASDAQ was doing at the same time, it was traded back to the T line, but they could never close it below the T line. So, yeah, Roy, I got to do something to keep things lively in here. So if we can analyze that one index is still moving up and the other one's moving back, what's that really tell us? It tells us that overall there's really no change of investor sentiment. We're still in an uptrend. Well, the clue that told us to kind of keep an eye open was when the Dow traded up big through the T line. But notice what type of signal it did. Well, what it really did was it didn't do a signal. This opened a little bit higher and traded higher, which means that's not a signal. What's the implication of that? That might not be a reversal of the downtrend. That might just be an uptrend or an up day and a downtrend. So when we saw a doji, then a close on the T line, and then yesterday where they closed it below the T line, that was all telling us that they probably didn't get to new highs. But at the same time, what was kind of confirming was the NASDAQ finally did sell signals or potential sell signals, and a close below the T line. When you start adding that all up, you're pretty much in a situation where you can see that the investor sentiment across the board had gotten negative. The S&P closed below the T line, the NASDAQ and the Dow came back. And if we can see a situation where we see sell signals, they bring it back up, and unless they did a new high, that means they've failed up here, started taking it back down. Where's our likely first target? Obviously the 50-day moving average, which makes it very simple tomorrow. If we see a lower open, that's pretty much confirming that we might have a bearish doji sandwich, which should, if that took the NASDAQ down, there's a good possibility they could take it all the way back to the 50. Can you explain why the big candle was not a signal? All right. I'll let you tell me what candlestick signal this was right here. Anybody? None. Exactly. If this was a bullish engulfing signal, it would have to have opened lower than the previous close and closed above the previous open. It's almost a bullish engulfing, but almost doesn't count here. That's why almost, if this was a signal, the Japanese rights traders say, well, almost a bullish engulfing signal will work, but they don't. They tell you it has to open lower and trade so it closes above. Otherwise, this is not a signal, and if you realize that this is not a signal, you're a little bit more conscious of the fact that unless they kept this up above the T-line, there might not be the strength of this uptrend that we were wanting. Yeah, it was basically kind of some short covering. But we also had the criteria that it was back up above the T-line, and we could stay long as it didn't close back below the T-line. Well, when they brought it back down here that second day after the big candle, we knew we only had one alternative. They needed to open it higher and trade it higher and stay above the T-line. The fact that they closed it below the T-line told us that this obviously was not a reversal signal and that they weren't going to go to new highs. Same time, we could be taking a look at the NASDAQ that had been pretty consistent. Now, there were times when it closed below the T-line over here. So what did that how did that kind of affect us? How did that kind of affect our analysis? Well, at the same time, they couldn't close the Dow below the T-line. So that still gave us a little bit of a perspective that this uptrend may still be in progress, even though they've just closed one index below the T-line, the other one didn't, and as we saw, they'd keep taking it right back up. So this is kind of a fine-tuning your analysis to just be aware that when you see something that's not a signal, just be a little bit more cautious about loading back up again. So this is why when it started turning over, we suggested putting shorts in your position or in your portfolio. Even when we took it back up, we still advised having a few short positions in your portfolio. And so now when you've, at this point, in this general area, as well as in this area, a lot of the stocks that were acting well all of a sudden had the rug pulled out from underneath them. Okay, some of the other things that are going on, the dollar trying to come back up through the T-line from the oversold area. This one, you don't buy the dollar until it does close above the T-line. The euro looks like the same type of thing, which means even though we're up here in the overbought area, notice what type of signal we had here. A non-signal. So what's that kind of imply? Kind of implies that they'll probably pull back, but it won't be a full-scale reversal. So I would assume that if this is a pullback, and I was going to trade the euro, I'd trade it very quickly to see once it got to the T-line, what it did at that area. The Japanese yen, on the other hand, has not, well, man, oh man. Notice it hasn't been able to get above the T-line for a while. Once it closed once up there, excuse me, and they kicked it back down, took it back up, knocked it back down again. Stay short on the yen until you see a buy signal and a close above the T-line. Crude oil. Crude oil is having a hard time getting out of this little trend channel. Now, crude oil, remember, prices move based upon investor sentiment. And right now, investor sentiment doesn't really give a hoot where crude oil prices are because everybody's gotten accustomed to it. So crude oil at $98 a barrel doesn't really bother anybody. Now, a few years ago, when it came from $65 a barrel to $98 a barrel, that really just bent everybody out of shape. Now it's already built into the markets. Everybody's accustomed to it. So crude oil prices at these prices don't really affect anything. But for trading it, as we can see, they're having a hard time getting out of this downtrending channel. We've had a doji gap up in the overbought condition, followed by selling. If they take this back down through the T-line, where's our next likely target? At the bottom of the trend channel. So you could be going short as long as it stays below the T-line. Elliot, whatever your risk-reward factor is, you can usually in big money accounts, I'd rather trade the ETFs because now you're kind of, I want to say you're kind of diversified. In smaller accounts, I'd rather be short individual stocks because individual stocks that have a good selling chart will probably move a much bigger percentage to the downside than just a general ETF. Let's see, dollar interest rates. Interest rates just kind of wobbling around here. Not even though this is in a downtrend, the downtrend based upon where the bond prices are is so minute, it's not affecting oil prices. Oil prices. It's not affecting interest rates. Let's see. Shazam, where's this one looks like a good chart to be shorting. Notice the evening star type signal up here, just as it's gotten up into the overbought area. Remember those that were in the moving average analysis the other day? They bounced up off the 200. They went through the 50, came up. Now where do you think they're coming back to act as, see if it's going to act as support? Probably the 50. So this makes for a good short because you've got indecision, bearish confirmation, kind of an evening star signal with two indecisive days. Now we're back down. We have a prospect of coming back down to that level. Looks like wheat is in a bearish J-hook pattern. Wave 1, wave 2. What's wave 3 done? Wave 3 has broken this support level. If they start trading this off, that tells me that wave 3 is going to end up down here someplace, which would probably kind of correlate with if you drew a trend channel right down through here, that's where the next target's going to be. What do you consider a big account? Oh, usually about maybe $500,000, $750,000 or bigger. What I would call a kind of an average trading account is usually maybe 150, 250,000. But it's all relative. What one person might think is big might be small to somebody else, might be huge to the other person. Let's see, gold, that's what I'm missing here. Gold, as you can see, is still in this downtrending channel. Where is it likely to go to? Notice what type of trading we had today. Doji, after gapping up and gapping back down through the T-line, where do you think it's going to go to? At least the first target is down here at the bottom, so there's probably a few more days to the downside. In silver, same scenario. Doji gap down. Are we in an uptrend or a downtrend? Logically, we're in a downtrend, and it's not showing anything where we have a major reversal. This was the closest one to it, but if this was a powerful reversal, where should this day have opened? Should have opened up here someplace and took off. They opened it down here and still just had to kind of wallow to get up to this level. All right. Always like to check the hogs, which obviously are still in a downtrend. Now, a lot of people say this is a good example. Shouldn't we be looking for a buy signal because we're in the oversold area? Well, as you can see, the oversold area can last for days, weeks, or months if the price is in a downtrend. Yeah, the one thing that you can't project is where is a price going to go to. Could this go to $1,000, back to $1,000? I have no idea. But I don't really care. I can make money by just seeing what it's doing right now. But you see so many of these analysts, and one of the most stupidest questions, if that's a word, is where do you think the market's going to be in a year from now? And they all give their numbers. Nobody has any earthly idea where the market's going to be a year from now. Nobody even knows where it's going to be 6 months or even 3 months from now. There's so many things in the world economy and the world events that we have no way of projecting where the market's going. Anyways, I could go on and on for hours on that. All right. Now, even though we've got a downtrending market, the nice thing about candlestick analysis is we can still pick out the charts that are showing us where the strength is. And that's why we recommended Mill today. We recommended it because the nice thing about having a chat room is we got everybody all looking for the same type of chart patterns that are going to show strength. And somebody, I think Stephen P., brought up Mill. And they had a left-right combo, booster, bullish engulfing, bouncing off the 50. And if it opened positive, what type of pattern was it going to do? It'd be doing a J-hook pattern. So we're sitting here watching the market sagging, which has nothing to do with the strength coming into Mill. The pattern told us that you want to be buying this one. And you still want to be buying that one. Same scenario on a fry pan bottom. Notice what INSEE has done, bouncing right off the 20 and the T-line. Getting right about in the area to break out. But notice what it's done here. Then again, notice what the markets have done during the same time frame. So this is one reason I kind of stress to people, watch what the patterns are doing, because it takes a lot of the market risk out of your trading, because you're now analyzing what is this pattern doing, and you really don't have to worry too much about what the market in general is doing. Is this not confused with INSY? Could be. I'm often confused. No. Well, it doesn't matter whether we're confusing it or not. This one looked like it had a good pattern, but we can see, again, this is the exact reason why we want to know what a bearish engulfing signal looks like, what a Morningstar signal looks like, what a left-right looks like. What did this tell us when we got up to this near the breakout level? They weren't breaking out. So it doesn't matter which one you're looking at. We can analyze any chart instantly once you know what you're looking for. Yes, Facebook is another one where Facebook wasn't phased at all over the last few days by what was going on in the market. And notice what type of signal it did today. If we know what this represents, a trend kicker signal, we know what we can look forward to, more upside. Am I cutting out? Maybe. All right. And here's why we want to know the simple rules. I was talking with somebody today, and one of the things that I have always worried about but have learned not to anymore is that things that I show are just repetition over and over and over, because a lot of times, and I know this because I would do the same thing. I would need to see something over and over and over to make sure that the Japanese rice traders that have studied this for 400 years, that they were still correct. So we know the simple rule of a doji. Notice that they gapped it up, and with a very simple rule, if they open up positive, they're going to trade positive. And I always come back to the rhetorical question, are we always going to get a huge price move? Not necessarily, but we at least know the simple rules of each signal, that if it opens positive after a doji, they're probably going to trade it positive, that it puts us in situations where if there is a big price move, we're in it. We just have a much bigger probability of being in the right place at the right time. Oh, when I was good. Oh, so I was illustrating the story of how did I get confidence in candlestick signals. I can remember back in my early days, I would say the same thing. Well, if this is going to work and it does this tomorrow, it should do this. So I'm going to watch it and see. And it would open up like it should, and it would do exactly what it should. I said, man, that's good. Okay, the next one comes along and say, I'm going to watch this. If it opens up this way, it should do this. And it did exactly that. Next time, I'm going to watch the next one. And I finally said to myself, what the heck are you doing? All you're doing is watching what has already been illustrated to you as being the correct thing to happen, not because somebody just came up with this on a computer program or just recently. This is an analysis that's been going on for hundreds of years, and it's not because any price movement is the same as another price movement. It's because human nature does the same thing over and over and creates these patterns and creates probability situations that are going to be greatly in our favor. So here's a case where they gapped it up. A lot of people say, shoot, I don't want to buy a stock that's up 60%. Well, you do if the pattern tells you it's going to go up another 50% the next day. Simple rule of a doji, but DJI had two dojis with lower opens. Isn't that a sell? Is that the Dow that you were talking about? Had two dojis with lower opens. Is this what we were talking about? Or the NASDAQ? Yeah, you would, but remember what we've got to still remember what our scenario was here. We were seeing dojis up here, but what was the NASDAQ not doing? Was not closing below the T line. So if it's doing a doji, next day it's doing positive trading, staying above the T line. Next day it's doing a doji, staying above the T line. Next day kind of a hammer doji. What they're doing each day is staying above the T line. So what are we getting prepared for, or what would be our selling indicator? The day we saw a big candle that took us back below the T line, which was yesterday. So, yeah, that tells us there's indecision up here, but notice there was lots of indecision here, and we still had a steady uptrend. So here was a case we had a big down day below the T line. If we closed out positions based on weakness, what did we see the next day? A bullish Harami. And what did that tell us instantly? That probably the downtrend wasn't starting, that we're still in an uptrend. We just had a big selling day. And why could we make that assumption? Because we know the characteristic of a bullish Harami, that the buying has stopped. Yeah, so you're going to see situations where, yes, you're going to have dojis, one's going to close lower than the other. And that's also going to be the case when you see a double doji setup. And there was one, I think. We'll take a look at it. But anyways, back to this very simple rule. If you see a doji, especially on a kicker-type signal, if it opens positive the next day, you can be a buyer. You just don't want to see it close back below that doji. And CCXI, this is your fry pan bottom. And where did your fry pan bottom start moving? Stayed above the T line, and now it's broken out above the 50. So what's your resistance level here? Not anything now on the moving averages. So where's your next target? More than likely, it's going to come back up and test to see whether it will get into the gap area or not. Why do we have that projection? Because we know what the results of a fry pan bottom is. That if they start breaking this out to the upside, notice we got kind of a little cup and handle. If they start breaking this out, there's no resistance, and what do we expect after a fry pan bottom? A very strong price move. GALE, what's this setting up for? There's our kind of our piercing signal, opening positive today. Makes this very simple. If this opened positive tomorrow, you want to be a buyer immediately because what type of pattern you're going to be setting up or signal you're going to be setting up? A doji sandwich. If you have a doji sandwich that takes you up this magnitude, what type of pattern do you have setting up? A J-hook. What do you need for a prerequisite for a J-hook? A strong price move, then a pullback, and then after the consolidation's over, another strong price move. And notice how this pattern got started. There's that slow curve that when they started banging it out through this level, that told you there wasn't any resistance up there. So I know you've seen me say this time after time, but we can go back and chart after chart, day after day, month after month, we can start looking, or we can be looking at charts that have the same patterns that are going to show us where the big price movements are. This one looked like it was consolidating right here on the T line. Today, I guess I better make this bigger somehow. Today, what did we have? We had a doji gap up. What's a doji followed by a gap up called? It's called your best friend because there's usually very strong results afterwards. Again, your best friend, whoops, it's that doji gap up like we're seeing in Zales. So the nice thing about candlestick analysis is I have no earthly idea what's going on in Zales' company, but somebody does. And this is going to tell me I want to be a buyer on positive trading. Where do you think our first target is? Coming back up into this area. Well, Shazam. Back up into that area. Well, I can't hit my butt with either hand here. What's going on? That pretty much tells me I got a big price move, sideways move. This one could have the same price move as right here. And notice how this started over here. Kicker signal with a gap up. Now we have a doji with a gap up. Where is the stochastics? Down here. So just a very simple analysis. Oversold, stochastics, series of dojis, a gap up. Where do you think the probabilities are that this trend's going to go to? Probably much higher. MODN. Let's see. I'm going to try to mix some entry and exit strategies in here. Again, part of people that say, man, I'm not making money. What am I doing wrong? I see the signal. I see it moving. And by the time I get in, it turns right around on me, goes the other way. That's because we want to be in a much more favorable spot to be able to sit here at night and say, all right, this is a nice little slow curve. It did some consolidation today. What do I want to do tomorrow on this chart? Pretty much, if this opens positive, I want to be buying immediately. Not buying after it's up here or up here. I want to be buying immediately because the probabilities of it moving up to there is extremely good. So at some point I said to myself, if these signals and patterns work, I don't need to see it confirm again to get me in. I'll get in, and it should do what I expect it to do, and if it doesn't, I'm in early enough that I can get right back out with a small loss. Well, this is, again, I am remiss. I've got a few more people that I need to call back that I had promised that I'd call them. But if you are having problems with that you're just not getting out of the chute, making money, you've got to come back to one simple analysis. Candlestick signals work, or we wouldn't be looking at them hundreds of years later. So if you're not making money with them, that means it's not that they aren't working, it's that we're not applying it correctly, or we're not interpreting what we're looking at correctly, or we're not implementing what we should be doing correctly. So if you're having problems, don't be afraid to email me with your phone number. It may be a few days before I get back, but I will get back to everybody because the whole point of investing is knowing what you're doing, and once you know what you're doing, getting your emotions out of the way. And I'm not saying this as a sage investor. I'm saying this as a voice of experience. I didn't start making money until I started deciding to do what the charts were telling me and get my emotions out of the trade. There were so many times when I would hear somebody talk about XYZ and say, oh, you don't want to buy this company. They've had these problems and the management is blah, blah, blah. And I look at the chart and say, well, somebody's buying this. So I discovered if you do what the charts do instead of what people are telling you, you get your emotions out of the way and you're going to make a ton more money. JR, that can be the case. And this is why I also told I was going to do some money management. I mean, there's times when I had that same problem. But as I had mentioned before, if I've got a portfolio of positions, I know that on say an average size account, say 250,000, I'm going to have 10 positions, and they're all going to be equal dollar amount. And that's got a couple reasons. Can you explain on short, please? On short. Lewis, ask that again. I don't understand what that means. Kevin, you don't let the indexes tell you what to do. First of all, you let them tell you in the sense that you want to be right now predominantly long, but that doesn't mean you can't be in some, predominantly short, but you can be in some long positions also. Now I've gotten so far off the topic, I can't even remember what I was babbling about. Nah. Oh, man. Money manager. There we go. Okay, thank you. I hate when I start drinking this early in the night. That's just a joke, everybody. I said that one night, and I had somebody email me the next day and say, I want to cancel my subscription because I don't want to listen to somebody that's inebriated when they're giving a presentation. And even though I emailed back and said I don't really drink at all, they wanted to quit anyways. So money management is that if you have too much money in one or two positions, that means that's what you're watching. But remember, we're playing the charts as probabilities. If I've got 10 positions on, that does two things for me. Number one, I have each position small enough that if something drastic happens in a particular stock, it's not going to devastate my trading account. On the other hand, each position's big enough that I better pay some attention to it each day when I get done at the end of the day to analyze whether I want to continue to own that position. And the reason I keep the positions at equal dollar amount is because of our simple ego. I guess that's all I have to say is ego. That if I'm usually buying $25,000 positions for a $250,000 account, and I say, man, this stock, this chart looks great, I'm going to buy $50,000 worth. You can bet dime to donuts that the next day in trading or the next day, as long as that position's on, you're going to spend 90% of your time analyzing or watching that one position and not the rest of the positions. And when it goes against you, your ego is going to say, man, I analyze this is going to be a strong position, and it's not working. It'll work because I analyzed it was going to work, and by the time you decide to get out of it, you're out of it 2 or 3, 4 days later. Instead of getting out of a position or a unit of your trading account, you're getting out of your favorite position. So anyways, way back to what we were starting on, entry and exit strategies. If I'm sitting here in the quiet of the night saying, if this opens positive, I want to be buying. Why? Because I'm coming out of a slow curve. I'm at pretty much of a resistance level. We consolidated today, and if it opens positive, it tells me the consolidation's over. I've got the potential of a doji sandwich type setup. So the next day when it opens positive, and I know I did this early in my trading career, I'd say, all right, I'm going to watch it. Oh, it's going up. It's going up. Okay, now I think I'm going to buy it. Well, I should have been buying down here instead of up here. What does buying here versus up here do for me? That if this didn't work, I'm right back out here. If it doesn't work from here, I'm out way down here and I've given up a lot of profits. Where do you put the stop? If I bought on a positive open and it traded positive, I'd have my stop on that day right at the open, that it shouldn't come back down through that level. Initial or equal size positions refer to the initial risk. What if one or two positions got way up, some profits, and you get the current risk down to the level of the others? That's why you're in that unit, because let's say you do have a position that has gone from 25,000 to 40,000 over a 4-day period. Well, now you start managing that position that says, all right, what are my signals telling me? Is this gotten up into an overbought condition? And if I sold off half of my position or a third of my position, is that the right thing to do? And do I go to my 10-minute chart and take some profits on 1/3 of the position so you get your money management so that as long as that position is staying positive, yeah, you'd like to see it go from 25 to 75,000. But there's going to be points. Not all stocks, or very rarely does a price move get huge gains. A lot of your gains are going to come from 5% here, 10% here, hopefully a 20% there, and it's not going to go straight up. So and if it does go straight up, you take off half the position, because now you've reduced your risk of being exposed to that position, and you got money back in the account. So it all equal out, knowing that you don't want to be too large in one position, because at some point you're going to start taking profits. Excuse me, and put money back in your account. I forgot what I started the sentence. That's pretty bad when you start a sentence, can't remember how you're going to end it. What happens when it gaps up? If this gapped up tomorrow, what do I want to see? I want to see bullish confirmation. I'll be buying the gap up. What do we expect after a bullish signal? We want to see the bulls are there. Am I going to buy it if it gaps up from a bullish signal? You're darn right, because that's telling me not only did they do a bullish signal, but they're so anxious to get back into that position that they've gapped it up. And that's the type of position I want to be in. Randy, I'm not there yet by a long shot, but would you still do 10 equal positions on $1 million account, or do you try to manage 20 positions? No. I may move from, let's say, 10 positions up to 14 positions, but the idea of having the positions gives you a few pieces of discipline. One, if you see the market going up and your positions are going up, and you see another good position or another good chart that you want to get into, what you have to do to keep your discipline is go back and say, all right, let's say you now move to 14 positions on $1 million account. You can add a few more. What you don't want to be doing is spending all day analyzing, or all night analyzing what your positions are doing. I can analyze 10, 12, 14 positions in a matter of a minute and a half, 2 minutes. And the analysis is, do I want to continue to hold this position, or is there something that's showing me that this is getting toppy or iffy? And the benefit we have with candlestick scanning is, each day, whether the market is good, bad, or sideways, I'm going to find 3, 5, 10, 15, 20, 30 stocks that have excellent charts to them. So if I've got a position in my portfolio that's starting to look a little bit iffy, why stay in something iffy when you can just move your funds over to something that has an excellent upside potential to it? What does traded positive mean? Just opening and trading in a positive direction. Okay, we're going to get Oh, we're on already chart 7 out of 40. What am I on? Mill. We were looking at this one. MODN. If this opens positive, notice what it will be doing. It will be breaking out of this whole resistance area. And does it have anything to resist it? Now it's gone through the 50. This could have a lot of running room to the upside. Whoops. If up. Okay. So trading candlestick breakouts require close monitoring, especially the first hour? Not necessarily. I mean, we're looking for breakouts based on what the chart pattern is telling us, and if it's doing what it's supposed to, yes, we're hoping for a breakout situation. Do you pyramid your buys on a position? No. If I bought a position and it was 25,000, I'm going to continue to own that initial position without adding to it. Now, I can fudge a little bit by saying, all right, I've got a position that looks good. I don't want to add any more of my big money to it, but I may pick up a few options to go along with it to enhance the trade. But I don't want to add to it because now that puts my ratio or my positioning out of whack. Let's see. Isn't the next target for the Dow going to be the previous resistance? It could be, yes. That's one of the targets. So if we take this analysis and say, where's our, let's see, where is this? It looks like, even if we fudge a little bit and make it right here, I would still suspect that with stochastics heading down and no signs of support yet, that we're probably heading in this to the 50 as our support level. And it doesn't really matter. Oh, this is just great. It's going to be somewhere in here that we got to start watching to see if they're going to support there. On the other hand, if we get to the 50 and it's a big candle that went through it, that's telling us a new message that the 50 is not acting as support. Now we got to watch for the what the next whether the 200 is going to be a support level. Crude oil, yeah, that's having a hard time getting through this downward trend channel. If this opens lower, remember we've had a doji gap up in the overbought condition followed by bearish confirmation. What's that pretty much tell us? That tells us the bears have taken control. Again, the doji at the top, followed by a lower open the next day. So we got two pieces of analysis to look at here. One, they support it on the 50 and do a J hook. Or two, they take it back down through here and confirm that the downtrending channel is still in progress. Now, do we know what it's going to do? Heck no, but we can know what to do based upon what type of signals we see at support or lack of signals we see at support. Okay, IDRA. There's that fry pan bottom, J hook. This one you can still buy, but notice what it's been doing coming out of the fry pan. It's been acting well when the market's not acting well. Omar, down here on a double bottom, morning star type signal, doji, bullish confirmation. Very simple. Where's our potential target on this? Probably the 50. Where's our stop loss? About the halfway point of this candle, which would also coincide with the T-line. So if I bought here, I know where I should be going, up here to test the 50. I know that if it closes more than halfway down this candle, I want to close it right back out. Again, because of two simple rules, because it's closing back below the T-line, number one. Number two, the Japanese race traders have always told us that if this is the candle that told us the bulls are in control, the bears shouldn't be able to close it more than halfway down that candle, or that pretty much tells us the bears are back in control. You want to be right back out of that trade. I think the one previous to this was Hydra. that what you were looking for, Gilly? And OSTK. This one, J-hook pattern, and notice what pattern it's done. Came up through the 50, came back. Where did it come back to? Almost smack dab on the 200. Inverted hammer, hammer, gap up. What type of pattern do you think you got? Probably that J-hook pattern. And if you were buying options on a stock like Omar, how far out would you go? Well, if I'm buying options, I'm buying because I know what the price is doing right now. So I want to get the closest one. Now, if it's too close for January or December, which is just on the fringe, I might come in and I might buy half a position of December and half a position of January, with the idea that if this pops for a couple of days, next week I close out the Decembers and then add the other half back to the January position. Is this a kicker signal? No, this is a doji gap up. Remember, a kicker signal is a big dark day, a gap up, and a big green candle. Let's see. Hold on for 1 second. Okay, sorry about that, folks. All right, no, so a kicker signal is a big down day, followed by a big up day that opened above the previous day's open. This is just a doji, followed by a bullish confirmation. MDXG is another good-looking chart. This is what we call the stepstone. Comes up, goes sideways, goes up, goes sideways, goes up. As long as this stays above the T-line, you can hang on to this one. And, I was illustrating this one because of that kind of that slow curve popping to the upside. Was there a Trader's Almanac for Friday the 13th? I don't know. The T-line is the 8 exponential moving average. Known as the T-line because it's the trigger line. Very simple. If you see a candlestick buy signal and a close above the T-line, you can stay long as you don't see a candlestick sell signal and a close back below the T-line. That was what I was kind of looking for, too, is Freddy Krueger, but I couldn't remember his name. Facebook, also, with that fry pan bottom. That's a good-looking chart. QIWI. This is where you observe the obvious. The obvious is you're in the uptrend. Every time it comes back to the bottom of the uptrend, you want to be buying because it's going to go to the top. So, now, is this a good trade? Well, we got the market heading down. More than likely, if you want to trade something positive, this could have another few quick points to it on a quick trade because your market's not being very bullish, but at least you have something where you can make a little bit of money on a quick trade. Coming in late, but curious if you discuss position sizing. Same dollar per trade or percentage based on capital. yes, 10% or whatever if you decide to put on 10 positions, you put in 10% of your funds on each trade. And the reason you stay there is because it acts as a discipline for you, that instead of saying, oh, I'm going to buy an 11th position, that means you didn't go back and check the positions that you had and say, is this new position better than all the ones I've got? And do I have one in my portfolio that doesn't look quite as good as what it should be? Well, if not, now you're taking out a position that doesn't look quite as good as it should be, whereas most of us would have a hard time saying, well, this one doesn't look like it's ready to turn around, and boy, would I look stupid if I sold it and it continued right on up. Well, you can get through that analysis by saying, I'm going to move this from a high-risk type trade over to a lower risk with a much bigger upside potential. Let's see. What he just said, it's not working for him yet, but I don't have another link because I see, but he's not. JR, I don't see what that was. Oh, let's see. ANAC was the next one I've got on the list, so we will do it. ANAC, J-hook type pattern. Notice where it opened. No. This one you can be buying on positive trading because you got that J-hook setup. And RAX, R-A-X. This one, you can see what type of pattern we've developed right down here at the bottom. Kind of that little Morningstar or cradle type pattern. But more importantly, if you have a pattern or if you have a signal, the inverted hammer signal, and it opens positive the next day, this is one of the highest probability trades that as long as it trades positive the next day, you want to be a buyer. The probabilities of it going up is extremely strong. And it makes for very simple stop loss. If it opens here and starts trading up, if it's got a high probability of going up, where should it not go? Shouldn't trade at all back below this level. If it does, that signal didn't work, you close it out immediately. Dan, that's also, yes, that's the concern based on a lower price stock. Let's say you've got a good size account that you're buying $40,000 a position, and then all of a sudden there's a $3 stock that looks good. Split up one of your positioning. Say, all right, I'm going to, instead of buying $40,000, I'm going to buy $10,000 of this small stock, and then probably move $30,000 into another position. Because two things. You don't want to be too big in a small dollar stock that doesn't have big volume, number one. And number two, if you're not trading the small dollar stocks, it should be more kind of just a side move to trade the pattern and not necessarily make it a full position. So you are saying that individual good stock chart patterns overwhelm the index being below the T line. Oh yes, the pattern and the signal are your number one criteria. And remember, anytime you see a pattern or a signal, it is based upon the accumulative knowledge of everybody buying and selling during that time frame. Well, as you can see, this pattern was much more inclined to perform based upon the pattern, and everybody that was buying today knew the market was soggy, but they were still buying this one. So the pattern is more critical than what the overall market is doing. One should always keep some powder dry. Yeah, you can do that. But I always consider my powder being that if I've got a position on that it doesn't look great, let me think of one. ZLTQ. Let's say over the last few days, this doesn't look great. It was starting to sag a little bit. I would consider it as one where This is my powder right now, that if I saw something else that looked something like this, I wouldn't be afraid to close this out because it takes, 7.2 seconds to close out a position and move to another one. Yeah, you want to keep your volume big enough so you can get in and out of positions easily. You would close out. No, you don't close out intraday. There's 2 stop losses. First of all, if I bought racks on a positive open tomorrow, where do I not want to see it close? I don't want to see it close, let's say, the halfway point down this candle or below the T-line. And if I'm owning it during the day and I bought it and it immediately goes south, where do I not want to see it trade at all during the day? If they have enough strength to pull it back all the way below the open, I close out the position, because if this is a bullish candle or a bullish signal, they shouldn't have enough strength to knock it all the way back down below the open of that candle. So intraday, I don't want to see it coming back down below the candle that told me the bulls are in control. At the end of the day, I don't want to see them closing back here below the halfway point. So that means, do I have ones that come down here and then start back up? Sure, but I've got 2 criteria. As long as it stays above that level, I stay in, but it better close more than halfway up this candle. That's okay. And you can do that too. That's another reason why when you make a decision the night before that if it opens positive or in the direction that you want it to, you want to get in immediately, because one of 2 things are going to happen. Mostly it's going to work because of the reoccurring patterns that we've witnessed for hundreds of years, or Japanese race traders did. So if it opens positive, what's that telling us? It should be moving positive. So you've got to get through. I need to see it confirmed some more before I want to get in. You've already made the assumption that if this is the pattern, slow curve, fry pan bottom, consolidation doji, if it opens positive, it's going to move in the direction of how it opens, that you buy immediately, or at least watch it and see if it starts ticking up instead of immediately opening and backing off. But if this opened tomorrow right here and started trading up, I'd be buying it almost immediately. Then I know that it shouldn't close back down here. So I've already made up my mind, if I bought this, where it shouldn't go. SRPT gap down. Yeah, but there was no reason that you would be long this stock at that point, because you hadn't had a close above the T-line. As a matter of fact, you would have been short right here because you had a bearish engulfing signal and a close below the T-line and nothing to tell you that you wanted to be a buyer. Down here, where do most people sell? They panic sell at the bottom. This is why when you start seeing the buy signals, you can go ahead and close your short positions. Okay. Jeff, you just figure out what system you want to trade. If I was working all day, I'd be a swing trader, that I'd know that I'd set my criteria of where it should, if I'm in a position where it should not trade at all during the day or where it shouldn't close, and you just put in an order. If I bought this on positive trading tomorrow and it executed, as soon as I knew it executed, I'd come in and say, I'll put a stop loss here, then maybe come back later in the day and say it shouldn't close more than halfway down. So if you're trading and you're at work, depends on how often you can get to the screen to affect your positions or put stops in. Now, what we're looking for on the short side, obviously, is those signals and patterns that tell us we've got something that's going to get the, what the heck? S.8 FCI. Well, Shazam. Lulu. Notice what it did here. Came up, failed twice at the 50. This is why we're shorting when it trades below the T-line. This is why you want to close out a position if you see a sell signal and a close below the T-line, because your probabilities of something bad happening is extremely good if you see a close below the T-line. S.MR. Another illustration. Candlestick sell signal. So if I closed out up here and I bought back here, I'm closing out back right here. As soon as I see it close below the T-line, I want to be out of it. So I'm not in something like this. The worst case scenario is it opens positive and trades positive the next day. I can always buy it back. Would you short it here, Bill? I don't know which one you're looking at. All right. And PDH. Whoops. S.PDH. Notice a slow curve. This is what we're looking for on these breakdowns. So we're looking for stocks that have those setups that may not have moved yet. But here's a simple one on BSFT. Notice the slow curve. Notice the doji today. Makes for a very simple trade. If this opens lower tomorrow, what type of pattern do we have setting up? A bearish doji sandwich. So if it opens lower, it puts us in the right direction. We know where our stop is. We don't want to see it close back up above the top of that doji, because that would be a bullish engulfing signal. And if it's traded down here, you just stay short until you see the next buy signal. SUNE. Anytime you see a signal followed by a gap down, there's your bearish engulfing, there's your close below the T-line. They couldn't get back up above the T-line. Bam. That's where that's what we're looking for, is that start with a good strong move to the downside. HWAY. S.HWAY. Notice it came right up to the 50. Notice the kind of the tweezer tops up here. It's failing up here every time they took it up. Where does this tell me they can take it to? Oh, there's wave 1. There's wave 2. Wave 3 could be this same magnitude. This one makes for a very good short on weakness tomorrow. And we know what the results of a fry pan bottom should be. So we're expecting a big boost to the upside. Same scenario with a dumpling top, which is the opposite of a fry pan bottom, where we can see them rolling it over. What should we expect after a dumpling top? A big, strong down move. So this soda makes it very simple that if they open this weaker tomorrow, you can be shorting, because this is where the type of patterns where they start pulling the plug and they just start crashing some of these. That's where the big money can be made when you're in a downtrend, because people only have one decision to make when they're selling stock, and that's sell. When they're buying stock, they've got to decide which one they want to buy, how much they want to buy, where they're going to get the money, how much money. They don't have to make that decision. All they have to do is hit the sell button. And so here's another one, RYN. Rolling over. If this is wave 1, wave 3 could be substantially to the downside. And LQDT. Same scenario. Rolls over. Look at where we are. Right smack dab on the last resort resistance. If they break this one down, there's wave 1. Wave 3 can bring you down into this area. Gas. Notice the gap down. They took it all the way back up to the T-line and failed and selling off. What's that telling us? They're still selling this one off. They've gapped it down. That tells me there's going to be a lot more force to the downside. Pretty much why we were in short on TDC. Doji gap down. What's a doji gap down? Your best friend. This one makes it very simple. A doji today, if they open it lower, it's a doji sandwich, taking us down, maybe wave 1, wave 2, going into wave 3. If they open it positive, we cover our short positions. When you talk about wave 1, 2, 3, are those Elliott waves? No. We know that prices move in waves. Is that it? So Elliott wave just came up with an analysis that prices move in waves. I don't care. I'm a swing trader. I don't care what's going to happen in wave 3, 5, 7, 9. I'm only interested in seeing what's happening in wave 1, wave 2, looking for wave 3. Another one to kind of illustrate the doji gap down. These are where people can pull the plug and just panic, get out of some of these stocks. Are your candlestick books available in ebook format? I don't know whether they are on our site, but I know they are on Amazon. Let's see. Prego, we'll get to everybody's individual ones. That is a piercing signal, yes. So that makes it very simple. If they open this positive, we probably have a J-hook pattern in progress. On the other hand, if they open it lower and start taking it down, you're probably going to the 200-day or to the 50-day moving average. IBN. IBN, notice the flutter kicker to the downside, which tells us there's going to be more force to the downside yet. So when I'm looking, the stochastics, remember, the stochastics are only telling you where you are in the trend. The signal tells you when there's been a reversal. What the heck am I doing here? Remember, it curled, started curling up right here. That was another, how many points? 7 points, 8 points, 13 points up here before it bottomed out. So the stochastics only tell you where you are in the trend. The signal tells you when there's been a change of investor sentiment. HMSY. Another one, just rolling over. They've started pulling the plug. If this opens lower, where's our potential target? Probably coming back down to test this low. And why would they test that low? Because they've already been there before. Now they're going to go back and see if they can take it back down to that level. There's your dark cloud. There's your bearish engulfing signal. There's your gap up failure at the T-line again. There's your failure of holding on to the 50-day moving average. Where's your next potential target? Down here at the 200. And OPK, which was a very good one on the long side, we closed it out when it traded back below the T-line after the gap down. Now what is it telling us? Doji gap down, stochastics heading down. There's our next likely target is back down at the 200-day moving average. Let's see, LCI. Oh, man, we're already at 9 o'clock. I don't know why that one's in here. All right. And MLNX was one that we were favored on with a J-hook pattern. But this is why you look at the patterns to see what your probabilities are for it moving to a specific level. This one was a very simple one. It came up through the 50, came right back to the 50, bounced up. What was our next target potential? The 200. But what did this signal tell us? It told us the sellers are back in control. Now what's our chart pattern telling us? That we're probably stuck in this downward trend channel. They could take it down here as our next target. So that's, again, using the signals tells us what they're doing or what they're not doing. So when they start seeing sell signals and the potential up move, and they start confirming it, that pretty much tells us our up move is not there. Time to close out the position and go on to something else. Okay, that's about all I've got. Was there any questions on candlesticks that I missed? No. All right, if not, Rick, go ahead and do the double line. And I'm probably only going to do about 10 minutes because, once again, my throat is starting to catch up with me. HOV, another one that you can be, whoops, that's not what we want, S.HOV. That's got that nice little rounding bottom. Kicker type signal. Notice what it did when it pulled back today. Used the T-line as support, came back up. What's our projection? Well, if it gets through this little downtrending channel, obviously it's going to go to the 200. Then you see what it does at that point. The market is heading down. I would suspect that the market is going to go to the 50-day moving average for all the indexes. TAN, very simple. Each time they took it up, they failed at the T-line. Now you've got the potential doji sandwich. If this opens lower, you want to be shorting it because you know at least your down move will be this big. And remember, if you're in the oversold area and they're still selling, that's the areas where they're going to start getting panic sellers coming in and just unloading stock. You stay long on ARCW. You've got the basing action in here, then a doji gap up. It's probably got at least the possibility of coming up most of this direction, if not coming back up and hitting the highs again. And Vivus, good little reversal J-hook pattern. This one you can be buying using the T-line as your stop. MACK. I heard a ringing somewhere. What happened here? MACK. Another J-hook pattern. This is the classic where they come up, they fail at the resistance level. They pull back to the T-line area. If it comes back up through this area, you want to be buying because you know you got the J-hook pattern in progress. Fro. No. Go. Another J-hook pattern. You can be buying this one on positive trading tomorrow using a close below the T-line as your stop. The scanning softwares that we use in is either Metastock or TC 2000. We're probably going to be shifting a little bit more toward Metastock here in the very near future because they've got more options on there for finding good trades. Plus, they've got all the formulas that I've written for the high profit signals and patterns. RNA, slow, yes, you can be buying this one on the basis that if this one gets going, notice what the percent return could be. You could get a 400% return out of this one. I'd keep an eye on this one, definitely. And CRZO, notice the doji sandwich, and where did it take you? Out through this downtrending channel with more upside to it. You can be buying this one on positive trading tomorrow. AIR, this one, if it opens lower, you want to be shorting it because that's your doji sandwich and also telling you the 50's not acting as support. HIMX, as long as it stays above the T-line, you stay long. And if this opens positive tomorrow, you can be buying because you're going to be moving up off a double doji situation. XOM, this one you can stay long, but just be aware of what lack of magnitude of price move is on this one. Not a very fast mover. ARNA. This one's trying to set up for a J-hook pattern, but you definitely need to see it close above the T-line to get that confirmation. END looks like it's doing a bullish harami right on the 200. Another one that if you're buying on positive trading, make sure it gets up through the through the T-line. And Kendai. Another one that has to open positive and trade positive to stay in it. If it opens lower, you definitely want to be out of this position. MU, stay long as long as it stays above the T-line. USO, This one is just like the oils. It's failing here at the 200 and the 50. If it opens lower, especially trading down through the T line, you want to be shorting it. Cisco. There's the failure. Doji gap down. You want to be shorting this one on weakness. Go. The wind is out of that sales. You don't buy this one. This one you should have closed out. But you can always buy it back as soon as they do a buy signal and a close back up above the T line. Netflix is still in a slow, steady uptrend. But that's the problem. It's fairly slow. You can be buying this one. Obviously, the options are a much better use of your funds as long as it stays in an uptrend. Under Armour, consolidated today, also like MOND or MODN. If this opens positive tomorrow, you want to be buying because that's a good potential breakout into new territory. I guess sell at the close due to weakness. Price below the T line, more than halfway below the previous candle. Means you sell about 5 minutes, 5 or 10 minutes before the close. If you can see that it's not going to all of a sudden shoot back up and close above the levels, you close out the positions. GRPN, stay long as it doesn't do a sell signal and close back right now below the 50. And Tesla showed some strength today. This one, all you can do is stay long as it doesn't close below the T line. And Costco. Costco, you stay short until you see a buy signal. Twitter, all you can do is stay long until you see a sell signal. At this point, with it up in the overbought condition, I'd have my sell stop at today's open. It shouldn't come back down through that level. Q-Core. Q-Core, you can be buying this one, but it has to get back up above the T-line. Argen, why I'm thinking of it, Argen, another one that has to close up with the T-line. Folks that are doing the option trading, don't be discouraged that there hasn't been any real zingers out there recently, mainly because of the market conditions. Ford, you shouldn't be in it right now if you're trading it. Long term, would still be looking for some strong buy signals as long as it stays above the 200. Back to the options. Don't get discouraged, or because of the market conditions, usually you don't see a whole lot of good trades when you see a market getting toppy. Now, if we started a trend, there's going to be some good shorts. Just like you'd see a lot of good longs when you saw the bottom of the trend or bottom of the support level being bought and starting the uptrend. So don't get discouraged right now because whenever a market is changing direction, you're usually not going to have a whole lot of option positions. So it's basically boils down to you make hay when the sun shines. So you're looking for situations where the sun is shining, not where it's moving sideways. And the reason I say that is because there was times when I would be trading options, say, man, I just can't make any money. And then I have to take a step back and say, why can't I make any money? And I look at the market and say, wait a minute, the market's not really in a strong trend. It's moving sideways or it's starting to roll over. Then I realize that I should be pulling back and not being too aggressive on my on the long side or the short side, depending on which way I was at the time. J.P. Morgan, looks like this one is still in a downtrend and will probably stay in a downtrend. Wouldn't be surprised if it moves sideways until the 50 catches up to it. And Halliburton, stay short until you see a buy signal and a close above the T-line. Conoco, stay short until you see a buy signal and a close above the T-line. Marathon, same scenario. Today was not a signal. That's not a piercing signal. That was just an update in a downtrend. You're still probably in a downtrend. Hot. Yeah. Hot. I I wouldn't be long or short this one, but I would be ready to buy because you've already had a bounce off the 50. I would buy if it broke out through this level. I'd rather wait, I'd rather be $2 late, but buying when the breakout has occurred. UGAZ, stay long, but here's what will likely happen. You've got kind of a hanging man signal. If it opens lower, close out the position because it's going to come back to see that once that major resistance level has been breached, it's going to come back and see if it's going to act as support. Carnival, I wouldn't be long or short this one. Maybe more short, but yeah, it's in a sideways junkie. I'd be someplace else. We did NC. NC, you can be buying this one on positive trading using the T-line as your stop. And CRM, this one you want to go short if it opens weaker tomorrow with your bearish doji sandwich. Potash, there's that failure of the 50. I'd be ready to short this one on any weakness tomorrow. Let's take a gander here. If there's anything over here showing support. Not really. It's probably got a couple more points to the downside. Nally was pretty close to the lows. The reason you want to be buying this one is because it pays about a 14 to 15% dividend yield right now. So I wouldn't be afraid to be buying this one on positive trading tomorrow. This is what I call the stutter step. Let's make this big enough so we can see it. Where they take it up, hit the first little resistance, pull it back, and then when they take it up the second time, the bears get out of the way. And ONVO, this one you don't want to be long or short. This one's having a hard time getting out of this sideways trend. And GNVC, this one you buy on a positive open. Remember, anytime you have an inverted hammer and they open it positive, you want to be buying. Now you've got an inverted hammer again. If they open it positive, what's it telling you? It's telling you they were taking profits, and if they open it positive, the profit taking's over. They're going to take it right back up. ZLTQ, today you should have been out of this position with a close below the T-line after a bearish engulfing signal. And GMRC, oh man, GMRC, S dot GMCR. How about that one? This one you stay with as long as it stays above the T-line. Notice the signal yesterday? That wasn't a signal. That was just a down day and an uptrend. So until you see a signal and a close below the T-line, you can stay with it. JAKK, you don't want to do anything here until it does hit the 50 and does a buy signal at that point. GLD, stay short. Got a doji gap down. The SPY, probably going to the 50. GFN, there's a nice J-hook pattern. This one you can be buying on positive trading tomorrow. And FXY, stay short. Nothing here yet to show us that the Japanese yen is showing any strength. Adobe, this one you buy on positive trading tomorrow. If I was going to buy this tomorrow, I'd put my buy stop one tick above today's high. If it comes up through there, you want to be a buyer. The Russell, same scenario. Doji right smack dab on the 50, and we're not in the oversold area yet, which tells us if they open this lower, the Russell's going lower. And EXK, EXK, stay short until you see it. Well, you can't stay short. You can stay short if you're short, but you don't want to be buying this one until you see a buy signal and a close above the T line. Yes, there will be a link to this tonight. Eagle held up a little bit today. Still think we're at a double bottom. We've been buying some down here with the idea that at least the next target is going to be coming up here to the 200-day moving average. Larry, I was supposed to write formulas for TOS. As a matter of fact, I think a lot of formulas are already over there. People just transferring them over there. And Ed writes good formulas, and we had kind of a stinko here in the last few nights. We found out that somebody was selling Ed's formulas somewhere. We're trying to track that down for him. But that, unfortunately, it's a low probability of finding who it is, but the other side of it is Ed's formulas are good enough that people want to be selling them on the black market. When you say above the T line, does that mean the wick or any part of the body? Remember, the Japanese rice traders boxed in the open and the close because that's the final decision. So you always want to see a close above the T line. You can have the wick trading down. Oh, it was on Craigslist? All right. You can see the wick trading down, but it needs to close above the T line. Okay, I'm going to call it quits because my, let's see, why isn't MRO a piercing signal? Because where does a piercing signal have to open? Oh, people have already answered. Piercing signal has to open below any of the previous day's trading. Okay, I'm going to go drink something hot and spicy. So everybody have a good evening. We'll see you in the chat rooms tomorrow.